Fed Chairman Jerome Powell spoke on Wednesday. He didn't make many people happy. He had a lot of information. Are you happy? I'm happy.
Clap along if you feel like a room without a roof. Clap along if you feel like happiness is the truth.
Hey guys, it's your favorite mortgage guy, Steve here. I know you're happy. I'm happy. Look at the weather. I was doing an event last night. It was amazing. Had beautiful tents set up. Oh my gosh. Then this storm came through with like 60-mile-an-hour winds. And there's 6 of us trying to hold this tent down from the wind and the rain and the temperature dropping 20 degrees in about a minute and a half. It was nothing less than amazing, but it was fun. Lightning everywhere. Trust me, we were all worried. So listen, let's talk about your questions real quick. Before I get started, I want to tell you something. Guess what next week is? The last week of May, June, last week of June. I'm going to say it early. Can you believe we're already almost at the end of June? All the graduations have happened. Everybody's moving on with vacations. So let's just dive right into it. Okay, Steve, question. How come the pictures I see online aren't necessarily the pictures of the house? I don't know. You got to ask your realtor that. I ask myself the same questions because some of these houses I look at, and believe it or not, some houses, I'll ask people afterwards, hey, what did you think of the house between the pictures and when you saw it? And a lot of them are like, wow, what a difference that you can make with a light or a camera lens. So ask your realtor on that. Is inventory rising? That question has come up at least a half a dozen times this week. If you're seeing it, I'm seeing it, and so is the market. We are seeing inventory rising. What does that mean? That means the market time may extend on the amount of time you might sell your house for. That also means that you might have to take a little bit less for your house. It also means that you might have to pay some incentives, like, for example, some closing costs, depending on how long the house has been on the market. But yes, inventory is rising. And what happens is you don't have the supply and demand issue that you had before. Should I refinance? Okay, that question came up about 30 times this week. Guys, I'm going to tell you again, I don't care about your 2, your 3, your 4, or even your 5% interest rate. Because what I know is you got a ton of equity. Yeah, I know you got a low payment, but you went out and bought a car. You got $30,000, $40,000 in credit card debt. Maybe you put a pool in. Maybe you did some other stuff. But I'm telling you right now, your blended rate is higher than it would be if you refinance. By refinancing, just call me. I'll run the analysis, but you can save up to $2,000 a month in cash flow. In other words, money in your wallet. Yes, you will have a higher mortgage payment that's tax deductible, but you're going to give yourself more cash back each month. Down payment. Can I borrow the money from my 401k, a stock fund, or anything like that? The answer is yes, but call me and let's talk about it. So the Federal Reserve made headlines this week with their decision to hold rates steady again. And while that might sound like more of the same, there's a lot packed into what they really didn't say. So let's break it down. Yes, you heard me. They didn't say. So the Fed continues a wait and see approach. They've made it clear they need more confidence in inflation to make sure that it's truly cooling off. Now, here's the thing. They don't want to make a move. The expectation that we're looking at is maybe 2 more months of watching economic data. The problem is the Federal Reserve looks in the rearview mirror, because if you're looking at data, you're looking at the stuff back here. You're not forward thinking. So I'm not an economist. I'm a mortgage guy. I'm just thinking outside of the box here, but particularly in labor and also inflation before we see any rate cuts. Now, what does that really mean? The good news is many analysts still anticipate 2 more rate cuts by the end of this year. 2. That means we're likely to be on track for a gradual rate reduction. Now, guys, that's good news for you, the consumer, because if you're thinking about buying, listen, let's get started. Let's get looking. So the labor market, next week's outlook, guess what? It's shaping up to be critical. We'll get the fresh economic data, and all eyes again are on the jobless claims. You know why? Because they've been persistently elevated. Is this a trend, or is it just noise? The Fed's next step may hinge on what we see here. So what does that mean to you? Well, here's the takeaway. Rates are likely coming down, just not yet. I've been telling you that most of the well, since at least March. But in the meantime, home values still are on the climb. Now, a recent survey of the nation's top 150 economists shows a median home appreciation rate at 3.4% in 2025. It's not over yet, but we're already seeing it. And over 19% cumulative appreciation over the next 5 years. I want you to hold on to that thought, because if you're waiting, I don't know why, because buying now allows you to lock into that equity growth, refinance later when rates drop. Now, do you see what I mean about buy the house, not the rate? All right, so listen, this week we had a Redfin report. Let me clear up the data on that. So we're clearing up the confusion from the recent report that's been making rounds and frankly spooking some would-be buyers. That's not what we want. We don't want to spook any buyers. Redfin claimed that there's 500,000 more sellers than buyers in the housing market, hinting that there might be a housing bubble. I don't think so. Here's the problem. Their math doesn't add up. Now, Redfin states that while there's 1.94 million homes actively listed, Realtor.com, whose data is used by the Federal Reserve, reports only 959,000 active listings. That's nearly a million homes difference between Redfin, which is a marketing company, and Realtor.com that gives their information to the Fed. Now, even the National Association of Realtors shows 1.4 million homes in inventory. That includes homes under contract. Once you subtract those pending sales, you're left with an active inventory much closer to Realtor.com's estimate. So, as for that 1.4 million buyers Redfin claims, they admitted it's guesswork, but the headline is out there. Remember, read the story, not the headline. Now, there's no national database of home buyers, right? It's pure speculation. We don't know what buyers are buyers are buying the house for until after the deal closes and it becomes public. So any speculative information is not reliable. So here's the bottom line. Don't let the headlines make your decisions for you, okay? The market is not flooded with sellers. Demand remains strong. If you're thinking about buying, this could be your window before prices move a little higher. Who knows, right? Who knows? It's supply and demand. But you want to know what the appreciation rate might look like in your specific zip code? Just reach out to me. Send me a text, send me a message. I'll go ahead and print the report. Actually, I'm not going to print it. I'm going to make a PDF for you so you can look at it. And I'll send you what we call the real estate report card. And it's tailored just for your area. Listen, here's what I want to say. Buy the house, not the rate. Most importantly, I want to thank you for watching each week. I love your questions. I want you to stay informed. I want you to stay confident. As always, I want you to reach out to me with any questions. So guys, I'm your favorite mortgage guy. Need your referrals, need you to tell your friends, your family, your coworkers, anybody that's thinking of buying, building, renovating, selling, refinancing, have them call me. I'll have a frank discussion with them. If you've got friends that don't know about their credit or down payment assistance, have them call me. Guys, I hope you have a super fantastic weekend. Bye now.
Here's why.